Well, in today's Money Monday, when a story about Wall Street makes it all the way to Main Street, well, it is worth taking note. And of course, we've got Kyle Wingfield of Finley Alexander Wealth Management back here to break it all down for us with GameStop, right, Kyle?
Oh yeah, that was well, cheers for Main Street, right? I think when we saw what happened, when everyone heard about the Reddit thread and what happened to GameStop, everybody's trying to figure that out. I think now that the dust has settled a little bit, I mean, the very playbook that hedge fund managers were using to make money off of Main Street, and sometimes at our detriment, got flipped on them. So they flipped the script on them, as they say.
Yeah, break it all down for us, because I feel like I was late to the party. I wish I were at the beginning of the party. I would have been a lot happier right now, but I was late to the party finding out about what happened, like so many of us were. Break down what exactly happened with this.
So instead of getting into what a short position is or what a call or any of those things, because we're talking about stuff that might take a little bit longer to explain. Just understand that what happened was, here are these big hedge funds that pretty much control most of the trading or profit from it, saw that maybe perhaps GameStop and some other stocks were headed probably south and wanted to make money on it, and took really, really strong positions, hoping that these companies would fail or drop in price. Instead, the Reddit thread went crazy and people were like, no, don't do that. And so they just bought the stock and ran the stock in the other direction, which is up, which then created what they call a short squeeze, which had all of the hedge fund managers who took those short positions talking, oh my gosh, I'm down billions, or whatever the number was. Their playbook got turned on them, and Main Street started making touchdowns, and they're like, that's not supposed to happen. So they started crying about it a little bit, in my opinion. But I think with GameStop and all that happens, we're seeing all this market volatility. People are now having FOMO. And they're like, well, where's going to be the next Reddit or the next GameStop? And I think, cool your jets. I get it. Nobody likes to miss out on stuff. I said, but the idea here is all investing has risk. And the idea is, people search yourself for why you felt like you missed out, and say, okay, well, everything gets back to planning. Everything gets back to planning else. Everything does.
Right. This was an anomaly, and who knows if we'll see it again. But what does something like this do to the market? And is everyone impacted, or just the people that, got in on it?
Well, I think when you see that kind of volatility, and then some might say manipulation, it can do a couple of things. It can inspire folks to want to get involved and more and want to invest. So from 30,000 feet, I think that's pretty cool, because people are starting to be like, hey man, I shouldn't miss out on stuff. The other thing is that it's wild swings in the market, right? So you got all this volatility, and up and then it's down, it's up, then it's down. That creates a lot of anxiety if you're speculating. And so I think it always gets back to this. No matter how great an investment strategy is, no matter how great the rate of return, it cannot outperform a poor savings habit. So
got it. So that's the big takeaway then, is just basically to be saving on the front end.
You have to. And I think what happened when I saw it, people were like, oh, I'm gonna miss out. I'm like thinking, yeah, but you know what? There's a whole bunch of people who saw it and said, that's pretty cool. But imagine if you never had to worry about the swings in the market, and you just saved money methodically over time, harness compound interest, and you're good to go without having to get some wild swing and the market going up. Because that's kind of what a lot of.
I think, we just look at it and you're like, I mean, maybe I don't want to need it, but it's still nice, Kyle.
Oh yeah. I'm not gonna lie. I mean, and if it does for anybody, if it inspires you to say, I got to do more, I want to get involved, I want to invest, I think that's great. I think you need to go approach it cautiously, though.
So, of course, we want to keep this discussion going. And fortunately for us, you're going to do that after this segment, right?
Yeah, we are. We're going to be on Facebook Live. So you can bring all of your questions about, GameStop, or just about finance, personal finance. What's your biggest concern? Like, what are you thinking? Or why can't you get a straight answer from maybe the financial people you're working with? And maybe I can point you in the right direction and give you some food for thought.
All right. Kyle Wingfield, thank you so much for being with us. Of course, every Money Monday. And we'll be right back with more Midday Maryland right after this. Stay tuned.